it's great to have you back on the P8FX channel. This week we have looked into Uber and we give our thoughts on whether it's a good investment or if it's just a taxi for Uber. Uber was founded in 2009 in San Francisco, initially called Uber Cab, offering taxi services at the tap of a button. They now employ over 22,000 people, operate in 85 countries, and they're reported to have 101 million active monthly users worldwide. They consist of Uber, Uber Eats, Uber Transit, Uber Health, Uber Freight, and Uber Business. They make their money by charging a commission to each of the services they help to provide. How has Uber fared on the stock market? Navigating through COVID-19, Uber shares rallied to an all-time high of $64, which was up 368% from the start of the pandemic. Share price is currently at $39, which is again below their entry price. Current finances. Bookings and revenue came in better than expected, up 45% on 2019. However, an overall loss was reported. Uber have reported improved waiting times and available driver numbers, which is important in terms of beating the competition. Uber Mobility, gross bookings $8.6 billion and revenue $1.62 billion. Uber Eats, gross bookings $12.9 billion and revenue $1.96 billion. It is clear to see that Uber Eats outperformed the mobility side of the business. Net income of $1.1 billion reported, but an operating loss of $1.19 billion reported. What else can we consider? Uber is the market leader in its field, and currently they account for 1% of all miles driven globally. The markets they are in and are expanding into are substantial in their own right. Mobility and delivery markets are worth $5 trillion each, with the freight market worth $3.8 trillion. If they continue to improve their waiting times and driver availability, Uber will have the edge over competitors. Customers have minimal brand loyalty and generally want to get from A to B quickly and for a cheap price. Is now a good time to invest? Uber has been able to work through the pandemic and adjust its operations accordingly, although they are yet to turn over a profit. Uber cannot keep paying bonuses or incentives to keep its drivers on the road. Therefore, they could struggle with supply and demand imbalances, which leads to increased prices and waiting times. There is continued public attention that is not to be ignored in the way Uber drivers are self-employed and how after fees and commission, many are struggling to make a living. Before investing, we would want to see an attractive share price, recorded profits, and less controversy surrounding their business model. Thanks for listening, and don't forget to subscribe to the P8FX channel, and I'll see you again.